cotton market as we take a look at how it's opening up today. It's down 14 points on July at 61.65, and December down 21 points. So, Chris, let's talk about this corn market. How is it able to trade higher when everything else is under pressure here today?
I'm not real sure. The last 2 days of last week, the traders were able to put it up just a little bit, and we discussed a little bit here this morning how the South American winter crop is probably not quite as big as what they had thought it was, but really I don't think there's a great deal pushing it up here. I think just it was so low in price, people just kind of got tired of selling it.
Well, when you look at the corn table here and you see where it's higher across the board, I'm fascinated by the fact that I look at the latest Commitment of Traders report, and it shows commodity funds were net short 282,266 contracts. That actually increased by 6,000 contracts last week. They're getting close to 300,000 short positions here held by the funds, and we're getting into the growing season now. That gets to be a little on the unusual side, doesn't it, Chris?
It does. That's a large position to be short, and especially at this lower prices. But if we can skate through the next 30 to 60 days in this without too awful much trouble, and I know that they talked a lot about the drought from the kind of central section of Kansas to the west of that, but it hasn't really encroached too awful much into the Corn Belt area yet to be of much concern.
Well, we were looking at the weaker soybean trade. Wanted to point out the soybean meal has July down 40 cents now at $288.70 per ton. And on the soybean oil, it was a little higher overnight, but right now it is showing July down 5 points at $28.09 per hundredweight. And the August down just 4 points. So kind of quiet there, too. Now, we'll come back and we'll talk more with Chris Swift, and we'll take a closer look at our cattle and hog market activity here on a Monday when we come back. Sugar prices is about 18 points higher here this morning as we get rolling on a brand new trading week. We are talking with Chris Swift of Swift Trading Incorporated. Now, he's based in Nashville, and we're going to dive now into our livestock markets. All right, on the cattle, let's take a look at what we're doing. We're starting to elevate a little bit here on the nearby contracts, Chris. June live cattle are actually going into delivery today, so they're 42 cents higher at 94.32. Most of your action now is going to be in your August contract, and that's 27 higher at 96.45. It had opened, roughly about steady, I believe. October 25 higher at 99.55. There for a little bit, it got over $100 at $100.20 for the high, and then it backed off from that. The far out deferreds for this winter are actually just a touch weaker. Well, let's take a look at our feeder cattle market, get you updated here with quotes from bar chart. So we have the August feeders now 70 lower at 133.47, and September down 60 at 134.87. We're lower across the board, but not as much to the downside as we had been on the open. We've actually come back about $0.50 now. On the lean hog trade, we now have June up a nickel at 47.50. The days are numbered here. Lean hogs go off the board this week. We have July up 30 at 54.22, and the deferreds from August on out are a little weaker, as much as 50 lower in the August contract. So not a lot going on here, Chris. What's noteworthy from your perspective there?
The thing that I probably noticed more this weekend is the significant increase in the processing capabilities. We have really ramped it up very quickly from what we thought we would, and that is beginning to slow the build of the backlog of cattle on the back end. But we've got we've got really good demand, and we've got ample, plenty supply. And as those carcass weights continue to increase and we are able to slaughter more animals, well, I think we'll be able to fill that any voids that are left by the grocery stores right now.
And why is it we're seeing more pressure on feeders versus the live cattle this morning?
Probably basis more than anything. The feeder cattle index is hovering around 128, 129, and the futures carrying a $4 to $6 premium to that is probably it more than anything.
Okay, well, thank you, Chris, for talking with us here this morning as we get things rolling on a Monday. Chris Swift is with Swift Trading Incorporated, based out of Nashville.